Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco.
Hello.
How are you, man?
Good. How are you?
Good, man. Good. Hanging in there. Just looking at, the 13F all came out and
Yep.
trying to make some sense out of what, I really think it's a good exercise to go into the 13Fs and see what people are getting longer or getting shorter or getting out of and where they're positioned. And, the Zero Hedge actually does a good, sent you an article, but Zero Hedge does a good job of giving a brief summary. Just to start, but they have an article here. They talk about, this is a report from Goldman Sachs Prime, which is the prime brokerage, and they give you an update on how the hedge funds are positioned, their clients in aggregate. And then they go through this summary here where it's, they're talking about individual hedge funds, some of the bigger guys, and they talk about what they're doing. I think the big takeaway was a lot of them got out of technology at the end of March. So you saw them moving out of that and into other things. They're one of the ones that I thought was interesting was the, I think it was Tiger Global got long or has got longer Roblox. And Roblox is a name that I've been seeing trade very well. Tiger Global, Chase Coleman, he's someone that I respect. I'm always looking at what he's trying to do and the names he's behind. But that one's interesting. And a couple of more. I won't go through all of them. I think I'll leave that for everyone to sort of look at. But at the end of the day, they were selling tech and getting into a bunch of other names. And then you could see, you can go across the board, Warren Buffett, a bunch of articles there. So this is where you're 45 days behind, but nonetheless, and they're probably, to some extent, maybe getting into some names now, but nonetheless, you get to see how they were positioning. And what I do like also is, going into holdings channel because they make it easy for you to see. So you see like calls and stuff, and you could see what you would do is Disney might be a little bit tougher to see, but let's take a look at a hedge fund name where a lot of hedge funds are trafficking in Las Vegas Sands. And let's pick one of our favorite hedge funds. Melvin's not up there yet. Let's see. Let's go down. 0.72. Let's see 0.72. He's actually not up there either. These guys, some of them are a little slick. They're a little bit late. So this is, yes, December 31st. I'm trying to find one that is reported and it's already up there. Here you go, Maple Lane. So these guys, they're faster guys. They move around their portfolio fairly quickly, but you can go through. And Maple Lane was the guy that used to work. His name is Leon Shalov, and he used to work with Raj at Galleon. He's in options a lot, plays it a lot, and you could sort of see his positions and what he was doing. So here looks like this is always divided by 100, right? So they give you the full share. So 4790 is a position of almost 5,000 contracts. But you could see where he was getting out of contracts, where he's getting into contracts. And I like going back, ATVI, he bought 4,800 calls. I like going back, and sometimes you can actually pinpoint the actual trade. You can actually see the actual trade. Pinterest, he was getting out of here, so the 1,000 calls. Yeah, a little bit easier. I'll go through it in more detail myself later on. But you can sometimes find where we were looking at stuff, and then you can go here and especially where it's something where it was just one print, 30,000 options. You can come here and you can say, he was getting out or he was getting in, or this is the guy that we're following. So I try to connect the dots 45 days later just to see who was the person doing that trade. Okay. And again, it's work, but I think you start connecting the dots for yourself from watching the podcast and seeing the activity to then actually see it print on a government document. So that's a 13F. And I would really, I think it's super important to do this exercise and to get comfortable around the 13F to see if you can find things, find where hedge funds are going into, find which hedge funds are going into. You then also connect the dots between hedge funds. For example, you'll look at Chase Coleman, Tiger Global. He's former Tiger Management. Also knew Bill Wang. These guys all know each other, right? You work at Tiger, you all know each other. They call it the Tiger Cubs. So Chase is getting in. You probably got 3 or 4 other people getting in. There you go. So I would say, I'd say it's a great exercise. That's one. Second thing today that I'm noticing, and I think you might be noticing as well. The little guys are fighting back here, right? The momentum fantasy names starting to turn a little bit, and so I wanted, to take a look at one because I thought it was interesting. We've been beating up on the name for quite a while, FUBO, and I got to give it credit here, right? If this is, we're looking at it as if it's call it a UFC fight or something, some sort of boxing match, or Rocky versus Clubber Lang. But you have this situation here where we're looking at it, from here and then here and here. And here we were saying, we're looking at the options flow, and the options flow is saying this thing could be down another 20% from here. It actually went down a little bit further, trades 15. And on this day, really shot back up on decent volume, right? So that was the first time, the shorts are bullying this thing down, and FUBO fights back here. The buyers fight back. Day one. Day two was good earnings. And again, good earnings and good volume. You see it trade back up to this 22 level, right? 22 level, right?
Yep.
Right here. Okay, this black line. That means it opened up, traded up a little bit, and then basically traded down the rest of the day. Traded again down the next day. And it stopped here, though. It stopped at 17 and a half or so. Okay, 17 and a half. So we went from 15 to 21.75 approximately down to about 17 and a half, 17 and a quarter. And guess what? They came back in again. And they stopped the bleeding here at 70 quarter, and they started pushing back up. The next day went back up above the 20 level, closer to this level right here where it was having trouble, right? It was having trouble, you could see, from right around 21 to 22, call it, right? Back here, even all the way going up to this level is a big level up here, right? The 26 level. Okay. So right around you're starting to see what's happening here. It's, this is the buyers step in, they try to bring it up, the sellers say, yeah, not so fast. They bring it down, and in order to stop this, you got to have a big buyer to say, or a group of buyers say, no, we like the stock here, trades up, and now it's trading above. You see how it's trading today, 21.92. It's trading above that day where it was earnings and the stock shot up. So 22 here is different than 22 here. You have to give it credit here. And so, I think also what's going on in FUBO is, look, there's a huge merger, one of the biggest mergers over the course of the last couple of years, right? AT&T is branching off, giving Warner Group, the Warner Media, and merging it with Discovery. And what does that do? That shines a light on what? On streaming businesses. It shines a light on saying, you know what, they're actually pretty valuable, and people are looking at them, and they're always looking to basically team up with someone else. And so that, to some extent, gives some more eyeballs on something like FUBO, who, okay, forget about earnings. Are they growing subscribers now? At what price can we buy them and take what they're doing? Do we want to take what they're doing? So it just gets them into the conversation again, and it gets that conversation growing. What's valuable? What does Amazon want? What does Amazon, there's a rumor Amazon for Marriott yesterday after the bell. I don't know if there's anything to that, but, at the end of the day, the big guys, it's a big chess game, and you're moving the pieces on where we want to be in the next 5 years. Who's going to be the winner? What is TV going to look like? What is streaming going to look like? All of that starts going into play. So FUBO gets into the conversation again, right? When you get these big mergers, the big guys doing something, what happens is that light gets shown on the little guys and saying, here are the chess pieces. Like, here's the toy box. Like, which toys can I buy for nothing? $5-10 billion. It's not going to matter, right? So, again, I got to give credit to FUBO here at going the other way now, and looking at the board, when we look at something like that, you start seeing again call activity here in the front month stuff. You're seeing a lot of speculative plays. These are all, I think you got to start looking at the longer term picture for some of these at the right price. I'm not saying FUBO is the right price right here. I mean, but I'm saying, you know what? I'm warming up to it here. If I'm short the stock, I can't be short here as much as I was before. Again, 22 on the way down is different than 22 as it started to move up. So you got to play, if you're short, you got to play defensive here. And I'm trying to give it credit now for maybe having, turning the corner from the 15 to 20 and maybe the next move. Remember, in this sort of environment, these moves up can catch people short. You can have a 30-40%. I'll say it for the next 6 months, 30 to 40% up and down in these names is going to be normal. So that's one. But they're buying calls. They're trading around here, trying to position themselves. I think there's something to it there. The next one just to look at is Palantir. And you'll see Palantir was a big name with in the 13Fs. Things were being shuffled around. A lot of interest today in, they had what's considered great earnings. They did what they were expected to do. The question is whether or not they have, basically the story of Palantir in its simplest terms is they have AI. They basically take on these large customers. They only have so many of these large customers that are going to pay $5 million to play with Palantir's product. Palantir wants to do the full stack themselves, which means it's almost like, give us your data. I'm Palantir, give me your data. I'll do the analysis and give it back to you. That's one way. Or we'll help you build something, but ultimately you still got to come through us, right? They're not giving the secret sauce away. That's one product. Some people call that more consulting. They want to say they're a tech company. The bears say it's not a scalable business the way they're doing it. So it's almost like consulting, IBM-ish. And the bulls then say, well, they're coming out with a new product. So Palantir said they're coming up with this new product that it's going to be more affordable to mid-sized companies, and they'll be able to give it to them, and hopefully that works. And obviously that grows the TAM to a lot bigger size. And by building a software that you could just deliver to someone, which is what most companies want these days, is something that you can make a lot of money off. That's in general the story. How they do it, what they do, it's all secretive. You don't really know. They have the secret sauce that gives you the right answer. You got to pay them to get it. That's it. The defense government is a big by itself. It's not. It can be bullish and bearish. The defense government, the United States defense team, is a big customer of Palantir. It's bullish because they have a significant amount of money to spend if the product is great. So that's the bullish side. The bearish side is what happens if somebody comes up with a better product and they just leave in one shot, and all your revenues or a high percentage of your revenues are coming from one customer. So, back and forth. But again, same thing you're going to see with a lot of these stocks. They're fighting back here. And Palantir, after a good number, stock was trading weak, over the last couple of weeks. You got to give it credit for what it's trying to do right here, right? It's trying to recapture. These don't change. Remember, this is going to be the same line. You're just kind of looking at it as at different points. Breaks here, that's bad. Now it's here. Let it hold at 21.5, trades 22, holds 21. Then you're going to see, you could easily see it back towards the 27 to 30 range. This is an important level, and it's going to change. This is the first. Let's see here. This was volume, not as much as we, would have liked probably to call it a complete low, but for a near-term low, this is pretty good for right now. And you want to see that this level. You want to see how it ends at the end of the day. You want to see if the sellers come in to try to press it again, or have they given up for right now and said, let me back off. We'll be back at around 24. So you can play your games here at 24. I got a lot for you. So that's what we're going to see here. And we're also seeing a large trade in Palantir where I don't know if you saw this. You see this August. Yep. We find the August 27th. So you had the August 27th trade at right here, not too long ago, about an hour ago. It looks like these are trading at, let's see here. Looks like these are trading at around 80, let's call it 88 cents. It looks like they were bought, the way they came in. It looks like let's look at the time. I could show you here, right? Right around here is when they came in, and they started, let's see here, small, right around here, 394. Take the offer 85 cents, 87 cents offer, 88, 88, 88, and then finish it off here at 88. Volatility was hanging around to 59 and a half. So it looks like this was, and it's all spreads. So it looks like this was on the offer, and then you can tie it together with the
20 puts, right? 16 puts.
The 16 puts right around the same time they came in, and it looked like, you see, this one is a little bit more pronounced where the volatility just stayed lower. And so you have, at the same time here, you have it on the bid. Okay, so vol was coming off slightly, but stayed around, say, but slightly lower. So I would say on the offer, on the bid, makes sense to what we're seeing, right? So it's a combination of we're seeing on the bid, on the puts, on the offer side, on the calls. At the time of the trade, the stock is floating up a little bit again here. So I think that's an interesting trade. Someone is basically paying, what do we got, about 36 cents, 88, call it 88 and 52. So 88 cents on the 27 calls and 52 cents on the 16 puts. Somebody's saying for 36 cents, I'll buy the stock at 16. If it gets all the way down there again, I'll buy the stock at 16. And for that, I'll pay a couple of pennies, 36 cents, and I'm long at 27. So let's look at that chart again. Basically the market has held 17. We're talking about 27 here, which is sort of right around, let's call it right around here. Okay, 27. And sort of looks like what we're saying here. I'll buy it here at 16, and I want to get long up here. The reality is, probably if it gets up to 26, they're going to actually probably get out of some, right? This will have gone to zero or close to zero, 20 cents. This goes up closer to $1.50. So they would make a decent amount. The other thing I was thinking, not sure, was, is this someone who has a short position on, and are they doing this against a short? So now they're trying to protect themselves to say, okay, this is the way a short thinks. I think Palantir is going to $12, let's just say. Okay, so a short says, I think it's going to 12. Okay. And I'm short here. And instead of covering my short here and then getting back in and covering my short, I'm going to get my short's going to get bigger. Maybe I covered a little here. Maybe part of this move, and over here I covered. So I covered small. And now I have my short on. Now I'm going to lay out more, maybe at 22, 22 and a half, maybe at 24. I'm going to get bigger at 26. And that's where I'm at. And I'm going to really start leaving. It's like, sell here, sell more here, and then sell a bigger amount up if it gets up to this level. In order to protect myself, I'll do this trade for 36 cents, right? Okay. So now I could really lean into, right? I'll have calls here. If the stock goes from 21 and spikes to sort of 25, 26, I have calls here that are protecting what I'm about to put in. Yeah, I'm going to lose on this short. I've been short since up here. So the guy's been making money ever since. He's probably, if you're short and it breaks this and it does this, you're probably covering a little bit because you're nervous. This should make you nervous. And then you basically do this trade for 36 cents and you just wait. It's just a trade where you wait. If it goes through 16, remember, it's 21 and a half. You're basically taking 5 points out. You're going to be covering your short there anyway. So it could also be, this could be a short that is sort of collaring the position right now for 36 cents, just going to wait. Has a short, I have my short, I'm just going to wait, gets to 25, 26, I'm going to lean into it heavy. How heavy? 1.1 million shares worth.
Right.
Okay. So one way to think about it, there's a bullish development here. I'm just trying to show you, I guess different ways to sort of process what we're looking at. That's one. The other one to take a look at is that we're seeing some volume is LI. Okay. In LI, we saw, back in the day, what was it back in the day? 2.5 months ago, we saw someone selling September 20 puts. Okay, they were selling them at, I believe it was $4. I believe, if I remember correctly, it was $4, which got you to break even around 16. So they were signaling that they're willing to buy this stock below $16. They want to buy it. Now the stock trades 19. It did trade. We were saying 16, so it does trade 16. And you could see, where does it stop? It literally stops right at 16. So, so we were, again, they sold the September 20 puts at $4, which was basically telling you, I'm a buyer at 16. Whatever you want to sell me, I'm going to buy it. And that was the low. It trades back up to 20. Now we're seeing similar type of trade. This might be just throwing it out there if it happens to get there, but I'm going to sell the 12.5 puts too now and literally just sit on that. If you're going to pay me, people got a taste of what could happen. They keep the vols up a little bit and they're going to pay me $1.20 for this. Fine. $1.20, $1.25. I'll sell you 3,000 of those and I'll just sit on that too. Because remember, these guys are big guys. 300,000 shares is just, for them, might just be a little bit of a trade. So they're literally just taking in premium and saying, we would buy it at 16 and we'd actually, why don't we take some more premium at 12.5s?
Yeah.
On 12.5 puts. So that's Lee. So again, you're seeing whenever Lee goes down, you are seeing people come in and sell those downside puts in Lee.
Okay.
Another name to look at today is Triple D. Triple D. Up 14% today.
Wow.
You could look at, doesn't look it's not like any of these other names. There's you got to give credit to the momentum names today that they're holding here and they're starting to push up. And so, again, held 18, holds 20, pushing off 22. And it's this is now a higher high, right? This is a higher high, right? 1, 2. Okay. Now, if it stops here and it comes below 20, okay, maybe it's going to change directions. But at this point, broke the 50-day, broke the 24. This is starting to be, remember this level right here, hasn't changed. Hasn't changed in 4 months. We've had this same level. Okay, so it's broken that level. It's recaptured the 50-day. It's recaptured this level. Again, you're seeing a boxing match and you see somebody getting beat up for 6 rounds, comes out in the 7th round, he starts wailing the guy, and now the other guy's hurt and he's backing up. Momentum has changed a little bit. That's what we're trying to show you here in some of these names, that momentum has shifted back to the buyer side to some extent. It may end that's here, or it may go up for another 20%, but you got to respect that the momentum shift here has switched a little bit. So you got to pair off, you got to step off the gas on shortening and pushing it right here when the market is telling you the guy's getting beat up here, like throwing the towel for the round, let's stop the clock and let's restart here.
Mm-hmm.
So
Nice.
that is Triple D. The one thing I would say about Triple D, because we're seeing some options here, we see this one, which was pretty interesting. Let's take a look at the January. This pops up, January 22s, right? $8.50 option here. They just came in at around 1045-ish, 1046. Looks like they came in first to take the offer. Something happened here. It was just a flurry over the course of let's call it 10 minutes, 10 15 minutes. There's some on the bid. The IVs was up and down. I looked at it. Looks like a buy. It looks like they came in to buy, just simply the way it all traded very quickly, how the stock was moving up. But I think the easier signal, I'm going to take this off here. The easier signal was or is, let's see, triple T. We're looking at 1045 right here. So you see at 1045, I don't know if there was news. I don't know what happened here. I'd have to look, but just taking a look at the last few minutes at this 1045 here. You saw the first buy, stock shot up, and you saw 6,000 options trade. 6,000 options on a 50-60 delta is 360,000 shares, which is about the delta, as you see here, 400,000 shares.
Nice.
This is 250. So a lot of buying comes in and takes it to this level. After the deltas are gotten in, it subsides, and then there's a buyer. The one thing that I would say about this name, and it worries me, being long this name, I could see somewhere down the line, you look at what they do 3D printing, and they sell their machines, and there's commercial use, and then there's people that are buying these things. And unfortunately, what they're building is guns through these 3D printers, and they are building a lot of them. It's easy. You can buy a 3D printer for, I think, $300, and you can get the blueprints of these automatic rifles or shotguns or pistols. I mean, that you just go online and Google this stuff and see it. It's rather scary, frankly. The one area where my wife's from England, and she talks, she says there's so many guns in the United States. It's scary. It's and it is, but we're used to it. And in England, they didn't really have like a gun problem. They had like stabbing problem, which to me is scarier. But I was like, I had a conversation with him, but I said that by itself is scary. But now, the police, and I read an article, the police in the UK are concerned about, like, the gangs now have guns and they have these automatic rifles, and they're getting in from these 3D printers. So, what does that mean? The way I think about it is that's a risk to something, right? That is a risk to the company in some way, right? If people all of a sudden, everyone has these guns, and you don't have to register these guns. So everybody has these guns, and, another shooting happens or something happens, you can get a class action lawsuit put on some of these 3D printers. I don't know how they will fix this. I don't know how it's already a technology that's out there. Do you ban it? Right. Do you just say but there's a big use of guns, use of these printers to produce guns, which is, it's a shame, and it's easy to do. And it's right on YouTube. You can take a look at what they're doing. The blueprints you can get, I'm sure, fairly easily if you start looking for it. It's something to think about in this particular company. There's a lot of good use cases for it. It's not just guns, but unfortunately, guns is one of them, and I think it's becoming a big problem. And we're another unfortunate incident away where they got to find the person. He's got one of these guns, and they got to say, we got to stop this, right? That's a problem. So, look, right now the stock, it's not a problem. Right now the stock is doing okay, and the stock is same thing, changing course. So that's one to look at. What else? CCIV, one you took a look at.
Yes, yeah, it's Lucid is going public, right? Public by itself. It's LCID.
LCID, right?
LCID, yes.
So that was the announcement today. I do see CCIV trading well. We obviously put that video out there to kind of give the bull and bear case and offer an idea. Stock is trading up here, only 5%. I think, if you've watched the video, I think the concern is at some point, how much can this Lucid be worth, right? What without even producing a car? What, do we wait? Do we, build some cars first? So I suspect that you get at certain levels, and then people start thinking this is a little bit too high. But it's a longer term play, Churchill. It's now a play to get Lucid. We understand, people understand the story. They understand what needs to be done. Now Lucid has to actually do it and sort of like get a couple of these cars on the road. But Churchill's one that I wanted to say just because I knew that you helped work on that video here. And then the other name that again is a name we've talked about here, DraftKings. We are seeing some volume here, and in calls. It's, look, the stock, we saw the play that I liked, which was just hey, we're gonna do a 3-to-1 play here, 50 cents, and we're gonna play for the 200-day moving average. These 200-day moving averages they're a magnet, right? They're a magnet. Once you go through it, you find some level. It's like a magnet, right, to like 50, 51 and a half, 52. So we're gonna wait to see how that transpires. And again, it's not bullish until it recaptures the 200. It holds the 200. Then the next, the 50 days got to catch up. So I suspect that you'll have DraftKings, 56 as a top. And then maybe if it wants to make another move down, you're going to see something here. But I suspect the next move is somewhere around 46 to 52 over the next, call it 2 months, a drift. So you got to be careful when you think about that. The stock has made its big move. You got, brings to mind like a Peloton, which has been trading great. We've been saying right after this move, we're saying, all right, don't look. 75 to 95 over the next couple of months. That's what usually happens after these types of things. So 75, 95, I don't know where it goes, but it'll be difficult to make a lot of money in the near term, I think, with Peloton, because after this drop, the volatility goes up and probably finds a range, and people who have bought options there get stuck. So this is a couple of things to worry about.
Okay.
Last momentum name that we will look at is QuantumScape. QuantumScape is a name that we've talked about in the past. Again, we were talking about here on this day when it dropped significantly. Talked about back over here, there was a short report and the shorts were jumping on it. Stock is up how much today? 11%. Not as much as the other ones, but up 11%. And I think let's take a look. One of our members, he put together something, and I get a lot of these type of emails where people are asking questions and ask me for my comments or what I think. I like it when people are doing the work themselves, and I see what I see that they're thinking about things the right way, they're approaching it the right way, and win or lose on the trade, it doesn't matter. It's the process, right? How are you actually thinking about it and doing it? Is it right? And then let's figure out whether or not the options make sense or not. So Marco, why don't you, I don't know if you have it, but so just quickly, he over the last few weeks listed a full back. Okay, so he's been watching the new options chain. He's been seeing some volume on May 28th, the 25 puts, and then he starts going into a little bit about the story. He adds a couple of links, but essentially it's what we said. QuantumScape is a fantasy story. It's a momentum name, fantasy. It's either going to work or it's not going to work. Okay, they have this new technology in batteries. I tried to read the short report, tears it apart. I tried to read it to fully understand it. Frankly, I gave up. It's like 100-page. I gave up, and my college days are over, and my capacity to start thinking about how batteries work and whether or not, I threw my hands up and said, it's either going to work, it doesn't work. Like, why am I even trying to understand what this guy is doing? Maybe, look, the shorts say it's a scam, right? It's a scam. The one thing I would say, in looking at it, because he asked me about May 20th, but essentially, at the end of the year, there was a pipe. There were a group of investors had done this pipe that came up off lockup, and people were allowed to sell shares. So if we look at the chart here in QuantumScape, it was right around here on January, right in the first day, where the stock was down significantly. The CEO was on CNBC talking about why. He basically said, nothing has changed in the company. We're still doing what we do. But a pipe went, the lockup was up, and so people were allowed to sell. And they did. Okay, stock was down tremendously. Traded around here for a few months, and then broke this 40 level here. Right here, I believe it might have been the first. No, I think it was here. Right around here was the short report that came out that really hammered the stock, essentially almost calling these guys frauds. Okay, they probably used the word in the short report, but you got the message that this guy thought, hey, they're frauds. Now, the guy stated he was short the stock, and I think he stated long post, but essentially he was short the stock. And the stock traded to 30, back up to 40, this level, which was now resistance, and then they sold it down to 25 recently. Today it trades 30.70. What our member was talking about was the fact that the lockup for QuantumScape is scheduled for probably next week, right? May 25th to the 28th. Right. And, I think that there's some validity to the argument that supply is going to come out. We have is facts, right? We can, that's all we can look at. When people from the pipe were allowed to sell, the day they were allowed to sell, they sold the stock. That's fair, right? That happened. It's factual. In next week, there's going to be a significant amount of shares that come up for sale that people are going to be able to sell. Will they sell the stock? Now, the stock is $25 billion. Okay. And let's see here. I want to make sure it's $25 billion.
It's around 12 billion.
12 billion. That's what it was. 12 billion. Sorry. Used to be 25 billion. Okay. $12 billion stock. So stock is a $12 billion stock, and insiders own a decent chunk of it. And will they sell? They're going to have the opportunity to sell probably next week. Okay. And will they take it? Likely that they're going to sell some. Okay.
Right.
Now, the question is, are there enough shorts to use that opportunity to buy some of that shares back? The supply demand, how does it work next week? So the question was about next week. Can we buy next week options? My answer was, he wanted me to look at it. So I did. And I looked at QS. And the first thing I did was let me look at next week. Now, this was early in the morning, and so nothing was really trading yet. But the open interest that I saw here was 1,000 and 1,000. I didn't really see that much. I did see a couple of thousand in calls as well. Didn't see that much. So the next step I went to was, let me just take a look at the whole open interest and see where the bets are really made. And why don't I just do, let's just do 20 to 35 and just see where are people long puts. And looks like, okay, so they're long some 35 puts. They're long some 30 puts. Looks like they've got some here. You see some 30 going further out in the months. And then I saw, okay, so the bigger line looks like it's June and this week. Not really much in May. So my first response was, there's not really much in May. That doesn't mean it can go down or it's not going to go down. It's just, it's a clue. It's just telling you there's nothing going on here. Nothing going on in June, June 4th, June 11th. But you know what? People were buying June 25 puts, it looks like. Now, I'd have to investigate whether or not they were buying those or not and go back in historical data. But it looks like that they probably got long some of these June 25s, probably based on what this member was telling us, that there's this lockup that will pop up. And, on if the stock is trading anywhere from probably 30 to 40 bucks, which was the average of the stock over the course of the last, outside of this big move, you're talking about where people were buying it here. Let's call it 40 to 70, okay? If it's anywhere around 40 to 70, the thought might be, hey, we want to sell some stock. And if the stock comes for sale, who's the buyer? Who's the buyer right now after the short report, not knowing whether or not the battery is going to change the world? And, I don't know. Who's that buyer that's going to take down all the shares from the insiders? That's the story in a nutshell, where he was trying to play and he's thinking about. And the answer is, obviously, we don't know. We don't know how that's going to transpire, but we do have some risk reward. And we could actually look at the board and say, for next week, my answer in response to him was, I like the idea. I like the thinking. I like the process. Let's look at QS here. Take a closer look. Where can it go? Okay, so where can it go? Well, it can really zoom to 35.40, I think, fairly easily. Just give it some positive, it's starting to gain a little bit of momentum. But this also doesn't look like a bottom to me. You see this? 1, 2, 3, 4. It doesn't look like these sharply. This looked like a near-term bottom. You see that? Yep. See that? And moves up. It's like, okay, that's a near-term bottom. This doesn't look like 4 days in a row sideways. Doesn't really look like. This doesn't even look like a bottom. And it's like sliding along, and it's not giving me any comfort that we're seeing. I like to see this. This is good. Like, you like to see this on the bottom, this on the other way. Sure, it pops up, but you like to see those V's to say, okay, there's a real rejection there. Here, it's sort of just sliding along, and I never think that's. Let's just say I don't get great confidence in that this is the bottom. So where can it go? If it breaks here, 40.25, I mean, the volume here, this was fairly quick, right? We went from 15, let's call it, we went from 15 to 40 in 10 days.
Wow.
Okay. 15 to 40 in 10 days. And not a lot of people here now, and then the volume picks up right around from 25 to 40. So can it drop to 15? I mean, it's very important to understand this is a fantasy. Okay. It might become reality, but right now it's just a story. There's a guy, he's smart, he's from Stanford, and he's got this battery. Now, there's a lot of people that say the battery can't work, in reality. It can't be the battery of cars because they still haven't figured out, cold weather, the thing's going to fall apart. And so there's a lot going on, whether or not that, and a lot of discussion on whether or not the battery can even work on a grand scale. But another way to think about it, which leads me to a little bit of a discussion on risk reward, is, the company is worth $12 billion. So let's think about it this way. The company is worth $12 billion. The CEO says the opportunity is hundreds of billions. You just listen to his interviews. The opportunity is worth hundreds of billions of dollars per year. So if QuantumScape actually develops this battery and it becomes the battery, and they take most of the world over with this battery, then you got to think it's at least $1 trillion business, right? At least $1 trillion company. Let's just say $1 trillion. Today it's 12 billion. Okay. So how much is what you should be thinking? How much is the market thinking, right? That it's real. You have to think about it that way. If the possibility of it winning and taking down a big part, it's $1 trillion and it's only worth 12 billion, then
1%.
Then 1% out of 100. So it's like a 1 in 100 shot. It's like a lotto ticket. And remember, I told you that you should treat these particular names like a lotto ticket. If it works, it's $1 trillion. It's going to go up, and along the way you can sell some. But you have to start thinking about it as risk reward, and that's how I think the big guys, the guys who are in it for the long term, they're saying, all right, we're going to think about it as here, just in case they actually build it and it works, we're going to throw in, we have $1 billion. We're going to throw in $10 million to this. Okay. That might be 400,000 shares or whatever it is. This is how you think about it. This is how you gotta try to play these names, especially if it's for the long term. So I would say, why couldn't it be $15 if they reduce it? But at some point, the guys who are long, who are just saying, yeah, it might be a fraud. 50% chance it's a fraud. We get it. But then there's that other 50% chance that it's $1 trillion. So that means it's worth a shot, small risk, amount of our capital. It's worth a shot to throw in a couple of bucks at this and say, okay, we'll go with it. Now, they have a story where the backers, the one part of the story that I don't like is the stories with the backers of the company. They have a history of actually building companies up and selling them. And so, are they in it for the long term, or are they in it for the good story, quick buck? We have a smart guy. We're going to stick him on the TV, and he's really, really smart genius. And, how are you going to refute what he says? That's always the issue. So I would be careful with these. But if you wanted to play this game of they're probably sellers next week, I would save some chips, but I would buy stocks up $3, $4 today. You're waiting for next week. That's a gift for you, right? That would be, that's when you see something like that, you're saying that's good. It's going up, ahead of this potential sale. And you want to reduce the size. These things, when you're trading 1 week options, even 3 week options or 4 week options on these high volatility names, your size has to be much smaller than a general position. So for example, if your size on swing trading is $1,000 per trade, $2,000 per trade, $5,000, whatever it is, if you're taking a shot on, we'll take a shot on Walmart earnings, that's a yes or no. That's a coin flip, with odds. And so you should be a third of what you're doing, and if you average in on a third, it should be 1/2 of a third or 1/3 of a third, because you're playing with a much smaller size. So with these things, you have to think about them as I don't know if anybody goes to Las Vegas. When you go to Las Vegas and you play craps, there's a $2 yo, and you just go, hey, $2 yo, and they throw $2 at it. And if you hit, you make some money, you make like 11 to 1, 10 to 1. That's what these things are, in the very short term. Nobody knows, but that's risk reward. The other thing I'd like to say, so we talked about the company being a risk reward play. We talk about companies, quick shots that you see, and we're like, all right, I can do that. I like that trade. I can take that trade.
Right.
Now we talk about sort of an industry type of trade where it's like someone asked me, okay, which Chinese company is going to be the next Tesla, right? And I say, I have no idea. How would I know? How would anybody know? I mean, NIO can have some problem, and then all of a sudden they switch and they go to Lee or XPV. So what I would say is, when they get low enough and you feel comfortable owning them for a long time, buy all three. And why pick? What might happen is you pick one, and that's not the one that goes up. It goes down, and they chose the other one. And now you had the right idea on China EV, and you lost because you picked the wrong horse, right? But if you pick a stable of 3 horses and say, these are the ones, one of these is going to win, hopefully the other 2 could just stay flat, then 1 wins, 2 stay flat or even lose, you're going to be a huge winner. That's the thinking with risk reward. That's what we're doing at Winning Picks Premium. This is the type of thought process that you have to get accustomed to if you're thinking about trading options. Okay, it's very important to think about things in this fashion, in this manner. The more leverage, the faster the game in short-term options. You move it closer. You're moving the risk a lot closer to expiration. The lower the dollar amount per trade, the much lower. You got to be much lower because the volatility is much higher. Okay, so these are things that hopefully you get out of this podcast, that you can make sure that you're positioning well, you're thinking about the trade well, your process of coming up with the idea is sound, and your risk reward on what you're thinking is sound. In that case, can it go to 15? Sure. Is it likely from 30 to 20? Sure. And then what we're seeing is, and this happened afterwards, what we're seeing is in QuantitateScape, volume coming in here. So volume's coming in on the 29 line. They were coming in a little bit earlier over here, 25, 26 for next week. Personally, me, I'm a little scaredy cat a little bit sometimes. And I would be looking at something like, how do I play QuantumScape where I can buy June 25s along with these guys? If they're buying these, they're thinking the 2015 level, right? And how can I get in here? So maybe I nibble here as a placeholder. Things are going to happen over the next 3 days. Stock seems fairly bullish. The best thing, if I bought one of these here, the best thing that could happen is that the stock goes to 35, and then I can buy the 30s or even the 35s at a lot cheaper cost. Does that make sense?
Nice. Yeah, I like that.
Okay, so it's always about one, you never know when the time you're going to buy it or sell something is the exact right time. Many times the best thing to do is when you have an idea, just buy a small piece and use it as a placeholder. So that way, if you lose, then you had a small piece, and now you can get the bigger trade where you want it. I mean, we were talking, for example, on Snap, where we had this trade over here, and we said, just there's a meeting on Thursday, and you buy the 55 calls. Nobody knows what's going to happen, so you buy a small one, and you just let it sit there. And if it goes up, okay, you make money on the one. If it doesn't give you a chance to buy at a much lower price, or maybe on a lower strike, because the event's not changing anything. It's just the market floating around. The event's going to stay. They already know what they're going to say. And, if you think it's going to be bullish and Snap's already down $15-20, then that's your placeholder. If it trades by accident 45, 46, all of a sudden you say, forget that 55. You can keep that money. Now I'm going to get bigger where I really want to get bigger and buy maybe like the 47, 48s. That didn't transpire. I'm just saying that's how you think about it. It actually went down to about 52 and stuff. And some of these, they're still coming down in price. Maybe you could have rolled it. You could have bought one of these down here. But again, that's how you play the game. It's about, for sure, you don't know where the stock is going. Nobody does. But you play the game in smaller size, and the idea is to have these placeholders at different moments so that you're like, all right, I like this idea. I'm not sure about the entry right here. Maybe I'll just buy one. I have 4 lots to buy or 3 lots to buy. I'll just buy one here, and I'm going to watch for this, this type of trade.
Right.
Okay?
Nice.
Good.
Nice.
So that's risk reward in a nutshell. And I want to make sure that everybody understands how we're looking at this and how they can figure stuff out. But why don't we go to the UOA?
We take a look at some airlines too. Yeah.
Airlines. Okay. So in airlines, we saw, it's constructive out there. The stock is, some of these stocks are trading well. Let's take a look at the chart again in something like American Airlines. I think it's important to go back now to where we were. Let's call it a year and 6 months. Nothing really changes here as far as where we thought, right? We were thinking, let's call it somewhere around, this was before. Okay, so let's call it somewhere around here. Right, we're talking about before the pandemic, really. Here, and this is somewhere around. Okay, just call it that. We called it normal, right? This is normal, somewhere around normal. So before the pandemic, before things shut down, that was normal. This was besides being a disaster, this was sort of the low here. This was, it's never coming back. The world is completely changed, and life is different forever, and it's never going to come back even to normal. This is a move because obviously some announcement, things are going up. It was a rejection here, and we saw that it came back down here, and it's sort of holding this level for quite some time. So we could just draw something there. This level was held again here, and it sort of looked like somewhere right around here, you could say, it was a step. You see it goes down around here, breaks up here, finds support. Then we saw something up here. We're taking this high, kind of going across here, and went through support, and then it went closer to normal back in April, and we were thinking, wait a second, we're seeing a lot of, at this point, we saw a lot of call selling, put buying, and right around this range, because maybe all of this got too far ahead of itself. Okay, so that was going on, and people were buying. You would see them put buying, call selling, and whatnot. All of a sudden, it holds, right? This kind of holds this level here, and then it holds a higher level here, right? So for whatever reason, 20.5 is holding, and it looked like 19.5 held over here. But the stock is starting to recapture its 50-day. This is all of a sudden starting to look like a positive development, right? It's all of a sudden looking like things are good, and all this call selling, put buying has now changed to, a lot of people looking at upside calls in the airlines.
Yep.
Okay, so we're seeing airline activity. What do you see in particular?
I see put sells.
This is big here.
Put selling, yes, it seems.
So this is, let's see my notes. I had something here in American. Yes, 30,000. Right. So here it did look like it was going through the motions here. At first glance, I thought it was an actual. At first glance, when I saw the trade, I said, "Oh, somebody's buying a 5-point put spread." But in fact, in further looking at it, it does seem that it was. It might have been on the bid. It's hard to tell always when there's spreads. They can print them wherever they want, but the stock actually floated higher right when this was trading. So I think my conclusion, and I'm not 100% confident here, my conclusion is that they actually were selling these things. So they were selling a 5-point, 20, 15, 5-point put spread at $1.30, and the max it can be worth is $5. So they're taking in $1.30 to give up 370 in losses if it drops through 15. I think what this says is they don't think it goes down. They're buyers right around this level, 18 and a half. So they're buyers right around here. And what it tells me is that I don't think they think it goes straight to the moon, because then they would just buy more stock. So it tells me that it's going to be around this range, call it 20 to 26 for a little bit of time. Okay. Mm-hmm. And they're just taking in premium to do that trade. But I've been seeing over the course of the last, let's call it week, just been seeing nibbling at calls. And that's also a little bit of a bullish sign. But you could see the stock is trading better, call buying, and then this is a massive put sale.
Right.
We don't see it often like this. So that's why when I see that, I'm wondering if the print was off or whatnot, but we'll see. It matches what the stock is doing, which is, hey, we're going to hold the 20 level. They've held it several times. And somebody's just taking some money, take 6.5% over the course of the next, where are we in May? So let's call it 7 months, May, June, July, August, September. It's called 7 months and 7.5 months at 6.5% is about 9%, right? 9% yield. So if you're willing to hold the stock, you're taking in 9%.
Not bad. Yeah. Nice.
Not terrible. Yeah. So that's what I see American Airlines. But we've also seen, I look at GE. Because they have a lot of exposure to the airlines, and we saw something in June here. The June 14th traded earlier this morning. The stock has come off, but it did trade here 12,000 times at about 18 cents. And the reason why did this stick out to me? Usually you buy the May 21st, big institutions, they buy the June 18s, they buy the Septembers. See, they buy the normal option. Right. The weekly option, June 11th, usually they're not buying that. Not that they're not buying it. It's just if you wanted to buy something because you think a stock is going up and you think it, the fact that it's June 11th, it's like the Las Vegas Sands. Like, why June 4th? Why were they so like why is it so intent to have June 4th? Like, what's going on there? Here's the same thing. Why June 11th? And Marco, I had shown you this right before the podcast. You did some digging and you found what you could tell me. I didn't even write it down. You found a few events actually,
Here it is.
right?
Here they
You
are.
remember?
Yep.
Gotcha. So here's okay. So May 27th, you have the Wolf Global Transport. Okay. Its senior VP will be presenting there. The CFO is going to, is it the chairman and CFO, Pope? Okay. So he's going to present at Bernstein. So he's the big guy, Larry Pope. He's well respected, and a very good manager. He's June 4th. And then June, is that the 9th?
Yes.
Senior VP, Chief Financial. So the CFO, but really, I think the big one here is this Bernstein one, and that's interesting. We see they're getting out there over the next 2 weeks. The company, you see that the CEO is going to be out there, CFO, Senior VP, they're going to be out there, and what are they going to be doing? Telling the story. So I think there's something interesting there. I've always looked at G chart. This GE has fallen from graces, but this guy Pope is a very good CEO, and he's trying to turn this thing around. They don't want to pay him. You can look at the news. They don't want to pay him, but
Yes.
He's getting paid more than enough than what's needed to live life. The stock here has made a very significant move. Let's go back a little bit just to give you some context. Okay, this was GE's beloved stock for many years and just fell out of bed. Too much debt, and tarnished Jack Welch's legacy and the next guy that came in. But they've had a lot of problems facing potential bankruptcy here. Here the stock has come back. So what you like to see is this was a tough level. Let's just take a look. Right, 13, and where are we at today? 13. Right. So yes, we have this clear level. Trades to 6. They're talking bankruptcy, but has made a very significant move here from 6 to 14 and has held over here. So you have a lot of, this is a big institutional name, a lot of players in this name. The problem with them is there's a lot of debt, but the guy Pope is making some big moves. He just got rid of, the news was GE Capital. GE Capital is more the financing arm of GE, but GE Capital Aviation Services, so financing airplanes essentially. He's basically spun that off or merged that with AirCap, and they're taking a percentage stake of the company, kind of pushing it to them, saying, "There you go, you run it, 46% stake." And on top of that, they got, I believe it was, I wrote down my notes, $24 billion in cash. They'll probably, if he does the right thing, they probably should take that $24 billion and put it into reducing their debt load. I think their debt load is probably around $70 billion. So,
Wow.
You take that debt load down, that's a positive thing. Obviously, it reduces, a lot of their businesses are not doing, they weren't doing great. They're heavily, airlines airplanes and leasing airplanes was a big business for them. Healthcare is a big business for them. Industrials, power is a big business for them. It's GE. So, this is, I suspect the money going into this EV change and what Biden's doing, I suspect GE will have their hands in that. They're making some moves. They just bought something in healthcare. So GE, that's in a nutshell. I think there's, if there's positive news, you could see it. Look, this is not going to happen. I don't think this goes up the way it went down, but I think if you can break here and get to 14, you could start seeing, where's the level here, right? It's right around 15-ish. Let's call it 15, 16 to 18, 16 to 18. You have here a move from, this is a large move. So this was 13 to 6. That's $7. 7 plus 13 is 20, right? So 20 might be your, from 6 to 13 to 20. But at first it's holding 13, which is a positive development. Let it get to 15, 16 first. I think if it goes up, that, right here is the next stop.
Okay.
Okay, so we're seeing people pay 19 cents. Again, I don't think G is not it's a thick stock. It's owned by a lot of institutions. People will sell it to buy, but people have made some money here with this guy Pope, and Pope's doing a great job. I think Pope came in right around here. They loved him, but this happened. So now he's actually looking to get paid more money here, and because he got trashed here, so he doesn't get paid by his stock. So remember, was brought in somewhere around here. His shares, or his share prices that he's got to hit in order to get bonuses, are probably right around here. And they're saying, hey, look, like, we got to pay this guy because he's turning it around. But this year was a disaster for us, and it pushed his years back. So he's not getting paid what he feels like he deserved. The board said they brought up their board. The board denied him and said you could probably live on $30 million, whatever you're making.
Right.
I think the payout would be $200 million or something. So something ridiculous. Anyway,
okay.
What else we got?
Nice. We got BP, also a big trade, it seems.
BP. So yeah, so energy obviously in trading well here. Let's see. Let's close this. I think some of these energy names are good. BP at a big level here, which is interesting. So just eyeballing it, right? You can just see it right here. There's a big level, 26 here. Let's call it 24, right around 24 range. And then we got the 20 range. Okay, so you can just see those seem like strong levels, or levels where there's this pivoting, and people buying and supporting. 26.83, the 27, call it, seems like a big level before you get to 31. So what are they doing? BP?
BP, in July, it looks like they're selling puts, buying calls.
Wow, 81,000. All right, so here, okay, so the 23 puts, they are, yep, volatility yellow line going down here from the day before. Trading on the bid, confirmed, and volatility going down, confirmed. Okay, so the three things we're looking at for that yellow line to be trending lower when these things are being bought. Volatility is down for the day. That's a clue. As they were being bought, volatility was this one. In this case, it looks like they were being sold, so volatility is going down. Okay, volatility going down from here to here, down when it trades. Volatility going down as it's being traded. It's also trading on the bid. And lastly, we look at the premium. So 1203, it trades 26 cents, 26 cents, 26 cents. A few minutes later, then it drops 25, 25, 25, then some more 26. That could just be where the stock is moving. But it looks like the premiums are going down as it was being hit on the bid. So I would say that this was, yes, a put seller. And then this 29s, we see the opposite, where the volatility, the yellow line, spikes up. So to see where it trades, and then we can sort of see 63, 63, 64, 65, 66. These are going up. The implied volatility is also moving up, and this is all on the offer. So that one's clearer than most. Call buyer, put seller. We've done our job knowing what they've done and feeling confident with that. The 29 calls, they paid, so what's that, about 40 cents? What is that, 23, 24? What were the prices? Let's see here. That was, let's call it 64 cents on the calls, and on the puts, 25 cents.
Yeah, around
so
25.
Net 39 cents about. Let's call it 40 cents. Just call it 40 cents. So 40 cents on that trade. They're basically getting long. They're saying we'll get long BP here at 24, and we'll also get exposure above 29, and we'll pay 40 cents to be able to do that. So they're taking out the middle, which is they're taking out 23 here to here. They're basically taking out. Okay, so they're saying from here to here, I have no exposure. Above here, I'm good. Below here, I'm buying. Right, okay. So I'm buying below 23. Above 29 is what I'm thinking. So in order to do this, he's basically thinking, if oil could stay up here, these guys are printing cash. You get to about 33, 34, which is, again, this is normal, right? 35 is normal. So good driving season. Summer's coming along. People traveling. World opens up more than it is right now. there you go. Back to normal, 31, 33. He's got the 29 calls. And if it doesn't, just on a valuation basis at 23, I'll buy the stock.
Cool. Nice.
Good?
Awesome. I love it.
Awesome. All right, good. One more? Last one. I think I had one more just to follow up. It's 205, but I'll do one more. The IQ. You see this guy, he finally won on one, and it went up. He was chasing this thing all the way down. He's now rolling. I can just tell you briefly, he's now rolling. So the stock, let's get just get this to 0. So this is IQ. Stock's up here. He bought the 13 calls yesterday for 50 cents. We were looking at, I thought the better value to just not look and say, I like it. I like IQ. This thing has gone down. There's a bunch of issues, but mainly it was attacked because of this Bill Wang trade and Archegos. There were blocks being sold. There's also China stories and whatnot, but Netflix of China, at certain point, this guy he's buying calls here, and then he bought the 13 calls yesterday for earnings. Earnings were good. Stock jumped. He rolled now from 13 now to what did he roll to the 15s?
Mm-hmm.
Is that what he rolled to the 15s in June? So he rolled in June here. It looks like he rolled to the 15s. So he's thinking to pay 50, 70 cents. He's got to be thinking 17. Meanwhile, all that dancing around, and plus he's down from being on calls all the way down and rolling. The 15 calls here for $1 yesterday, I still think we're just, he could have lost. It could have went to 11 and these things would have only went to about, 75 cents. He would have lost his 50 cents. So net, he made a little bit more money there, but he's still chasing and running around. I just think just buy the 15 calls and stop looking at it, and stop thinking that you're going to catch every move up and down. So 15 calls for $1, get you to 16. You're making the argument that, it can get back to sort of, he was buying the 17 calls, this guy. So you could have, he's thinking back into the 20s. So
right.
that's just one update on that. Everything else is back and forth. I think the Tesla, again, is the same thing where I haven't looked at the market in the last hour, but it was showing strength. I mean, it traded down. Burry's, Michael Burry came in with a big short. It trades all the way down to 70. As soon as it's trading down like that, and then it recaptures, it does this, and then it goes straight back. Look, part of having these little trades, these little quick trades, is knowing when the thing changes, is being comfortable saying, whoa, that was fast. The momentum just changed. I'll get out and maybe lose $1 or $2.
Right.
Tesla didn't do that for, let's call it, hasn't traded like this for a week and a half. But today, something's changed. Again, the momentum game has come back a little bit. So you got to respect that. On any time you short anything, you just got to respect it. Don't try to be a hero. There'll be another time to come back into the name. I still think Tesla has, a lot to fight through. But at the end of the day, you're trading much smaller than you are in a bigger position, in a swing trading position.
Right.
Okay. Good.
Cool. Awesome. Thank you, Felix. Thanks everybody.
Awesome.
We had a great discussion today. Like the video, subscribe if you haven't, and we'll see you tomorrow.
Be good.